Hello guys, welcome back to LIL FOREX ACADEMY YouTube channel where we dive into the world of forex trading. If you are new here, I am your host LIL FS Coach, and in today's video I've got something special for you. This is what I really teach in my mentorship program, and then we are going to be looking at the art of trading market structure and trend. And today I'll walk you through the nitty-gritty details of understanding when to click your buy button and sell button and find opportunities to make profit in the market. All right, so if you're a professional traders looking to refine your skill, or you're a total newbie eager to kickstart your trading journey, you are in the right place. This channel is all about education, and my goal is to empower both new and experienced forex traders to become profitable. So, if enhancing your trading game and navigating the market effectively is what you are after, you are in the right spot. And you know what? Go ahead and hit that subscribe button, guys, to join our growing community of traders committed to success. And to all our fantastic returning subscribers, thank you for coming back, guys. All right, so without any further ado, let's dive straight into the video and let's make it happen, guys. All right, so looking at my setup here on the screen today, you can see that this is an uptrend, and I believe I've done so many videos explaining how to know an uptrend and when to know how to know a downtrend, right? And clearly you can see that this is an uptrend because the market continues to give us a new structure high. You can see that this high is higher than this previous high, and this new high is higher than this previous high, right? So if you can spot this, good one, you know this is an uptrend, and you know this is a downtrend, right? So now in this video I'll be explaining to you how to use the Fibonacci trading tool to know when to buy and when to sell. For some of you, this might not be a new strategy, but I'm just going to give you something, a tips that will help you, to know when to click that buy button and then when to click that sell button, right? So I'm just going to explain the theoretical part here, then we'll go to our chart and then we'll backtest to see how it really works in real life and how to pick a good trade, right? So now, starting from this uptrend scenario, you can see that the market move up to give us a high here, then come down to give us a lower high, higher low, rather higher low structure, then move up to give us higher high structure. Then what we want to do is we want to know how to identify this particular spot and then pick our entry to for the market to give us a new high. Do you get that? And remember, this is a break of structure, and then we'll be expecting the market to also break this structure so that the market continues to give us the new high that we're expecting. All right. And the downtrend scenario is that the market has given us a lower low here, move back up to give us a lower high, break the previous low now to give us a lower low structure. All right, so break this structure to give us a lower low structure, right? And the market pull back again. So how do we spot this particular zone so that we can click ourselves and then make profit from the movement to give us a lower low structure? That is what this video is all about, guys. All right. So if you have any question concerning what you can see on the screen right now, or you are finding it difficult to identify uptrend in this case and downtrend in this case, then you can just comment below. I have several videos where I've explained on how to identify uptrend and downtrend. All right. So this is just the basics, the basic theory, and we are going to just look at the market right now and identify where we can call our buying or selling opportunity in this scenario using the Fibonacci tool, right? Remember I mentioned the Fibonacci tool looks like this. In an uptrend, you draw from low to high, and that's several percentage. So we have the 23%, we have the 38%, we have the 50, 60, 78, and 100, right? So in this strategy, we'll be looking at the level 50 and level 61. That is more like a perfect trend that we want to look out for. All right. So and let me just explain again that when the market is moving, I usually mention this in my every one video. The market moves in waveform or zigzag. So the market will go up, down, right? So these are all pullbacks no matter the depth. This is a pullback no matter the depth. This the continuation. So this is also a pullback. This is also a continuation, right? But you can see that the pullback here is more than the pullback here, right? And what this pullback means is that the buyers are still very much active in this market to continue to push the market to the upside, right? And what this massive pullback signifies that some selling pressure is coming into the market, but we have it dominated by the buying pressure, and then the market continues to go up. All right, so sometimes it's good to look at the market with different scenarios and make a story out of it, because this is price playing out here, right? So if you are doing that, you'll be able to see the market in a different way. Yeah, so this is what we have, and then we are just going to map out what I just explained based on the market structure. Okay, so remember, this looks more like an uptrend, so we'll be looking for a break of structure and then wait for a pullback before we get into the market. All right, so let us backtest this strategy. Right, so this is the previous high that we have here. This is the previous high that we have here, and this is the previous low that we have. Okay, so what we can see is that this market is still trading within this high and this low, more like a range. Alright, so what we are looking for is either this market breaks up or the market break down, and then we look for the level we want to trade in. Alright, so I'm just going to play. Sorry, I'm just going to play, and then we see how the market will pick our entry. Alright, so there we have a breakout. So you don't jump to click your buy right from this zone. All right, what you want to wait for is for the market to do a pullback and then go for your buy. All right, because you remember the market moves in waveform. The market will not continue to move up in this direction. It will do a pullback and then the market will move on. So, but my point is, how do you know when the market is going to pull back, and how do you know the extent of your pullback? And that is why we need the Fibonacci tool, right? So now, one of the first rule I'm going to give you is that when you see a 3 bearish consecutive candles, that is the beginning of your pullback. In this case now, an uptrend, 3 consecutive bearish candle will signify a pullback. If it is a bearish like this, and we have 3 consecutive bullish candle, 1, 2, 3, this is a sign of pullback. Okay, and if you want to pick this cell, we identify the last high, the last low, and then we do our Fibonacci. Remember, in a downtrend, you start from the top, drag it to the low, okay, and then you wait for the market to pull back to your level 50 or 68, okay, and then you pick yourself. So in this instance, I will have taken a short position from level 50 or 61 down to the previous low, okay, something like this. So I'll have done something like this. All right, now remember, this is a break of structure. This is not what I'm supposed to explain, but okay, let's just get over it. All right, so you can see there's a break of structure here as well, which is telling you that the market is probably going to an uptrend. Okay, and if you want to take this position, you look for your buy, you look for your low and your high, and then you pick level 50 and 61, and then you can place your buy position within that level, and then wait for the market to come up to your previous high. All right, so this is, by the way, this is not what I want to show you anyway, but I just want to explain to you how this strategy works. All right, so we're expecting this market to pull back after we see 3 consecutive bearish candles before we map out our levels. All right, so now we have 1, 2, 3 consecutive. So I don't know when this market is going to stop, but what I just want to play with is pick my Fibonacci tool, map my low, mark my high. Remember, the pullback starts from where I see a 3 consecutive bearish candle. Okay, and I want to map my level. I want to map my level 50 and 61. Alright, so I'll just draw a rectangle line within level 50 and 61. Okay, and what I'm waiting for is for this market to drop to this zone, and I'll pick my buy. All right, so let's just put a long to the previous high. So let's play to see what will happen, and the market comes to trigger the entry, and then boom, the market moves back up. All right, so it's just as simple as that. But now let's do the next analysis. So what you can see here is that, remember, in an uptrend the market continues to give us higher highs and higher lows, as I've explained here. Higher highs, higher lows, higher highs, higher lows, higher high, right? So the next thing you want to make sure to see is that there is a break of structure here as well, right? Remember, this is the new high that we have now, and we have a low right here. Okay, so the market is currently breaking out from the previous high, and it looks more like an uptrend. And remember, what is the rule to have our reversal or pullback? 3 consecutive bearish candle. We have that 1, 2, 3. Okay, so now we can also mark our level from the low to the high. So you start mapping immediately you see 3 consecutive candles. I'm just trying to, I will look for another examples where we don't have 3 consecutive candles and you don't regard that as a pullback, alright? Because I've realized that what the mistake most people do is they don't know where to pick their high, they don't know where to pick their low, because the market just continues to move, right? But if you follow this rule diligently, you'll be able to know when the market is reversing, when the market is going in the trend direction, right? So we have marked our low, we have mapped our high, and the next thing is just to look for level 50 and 61, and we map it. Okay, and as you can see clearly, and as I mentioned earlier, I don't know where the market is going to revert. This is just my point of entry. I'm just expecting this market to come down to this level, and I'll be expecting it to go back up, right? So I'm just going to place my buy here to the previous high. Okay, and then wait for the market to play out. Alright, so what you see here is that the market never gets to level 50 and 60. Alright, so what you will see is that, let's map the low and the high again. Okay, you can see the market started bouncing off from level 38. So this was what I was explaining earlier, that if the market is in a very strong uptrend, right, the market might not even pull back up to 50%. The market might just pull back 30% and then continue to go up. Sometimes the market can do 50%. That's like a normal trend, right? And when you see 38%, that's like a very strong uptrend. Okay, so sometimes the market moves aggressively sometimes, right? So when the market is in a very strong uptrend, so the market is reversing from 38. I don't like using level 38 because I'm just not comfortable with that. I prefer to see level 50 or 61 and then take the market back up. Okay, so that is not an entry for us. But what you will see is that the market still continues to give us a new higher high structure. So the market gives us a new higher high structure. Okay, and remember, for our rule to conclude that the market is pulling back, this is a single bearish candle. This is not a pullback. This is just two. This is not a pullback. So let me play until we have three. So 1, 2, 3. This looks more like a good pullback for us, and we can map up. Let's map up our level, the low and the high, and the market already triggers. So this is our level 50 and 61. This is level 50 and 61, and you can see exactly when the market pulled back to that level, it started going back up. Alright, so I'm just going to put the long position there. And see if the market will give us a new high again. So the market gives new high, right? So there is a break of structure here as well. So if you ask me that what am I looking for going into the week, so I will also tell you that I'm just waiting for this market to, you know, I'm waiting for the market to pull back to my level 50 or 61 and then go back up. So I hope this video is able to explain to you how to use the Fibonacci tool to pick market in a trending market. All right, so let me see an example here. So for example, this is your high, this is your low, because following the rule, there is a 3 consecutive bullish candle here, right? So you have high, you have low, and then there is a break of structure. So this is your new high, and then this is your new low. This is your new low here, this is your new high, because we have some 3 consecutive candles here. Okay, so in this regard, you can just place your Fibonacci tool to determine your entry if the market is going to come back to level 50 or 61. So you can mark your level 50 and 61, 50 and 61, and wait for the market to come back to your level. Wait for the market to come back to your level, and then you sell to the low. And you can see how it plays out here. Alright, so this is just a simple strategy. Know your market structure. Know your market structure. I'm just going to do that again. The market continues to give you higher, low. Okay, when you have this and you see the market coming down 3 times, 1, 2, 3. Okay, the next thing you have to do is to mark your high, mark your low, and then put your Fibonacci. This is an option, so you mark from low to your high, and then mark your 50 and level 50 and level 60. Okay, and then wait for the market to come back to your zone and then go back up. So you're probably going to put your buy on this zone. You're probably going to put your buy here and then wait for the market to move up in this direction. Right, so this is how you use your Fibonacci to determine your trend, and you can pick your trade into the forex market. Alright guys, so I hope this is helpful. If you are new, please subscribe to my YouTube channel, and if you are returning subscribers, thank you for dropping by guys. See you later. Cheers.